Well, greetings and good evening to everybody. I've got Nick Ward with me yet again, one might say, but fortunately, I'm quite sure that my regular subscribers will know the value that he adds, like one or two other, international players that I bring onto the channel by and by. So this evening, we're going to talk about silver because silver is now becoming extremely important and extremely topical. And in the past, in the main, Nick and I have talked about, in the main, we've talked about gold, and everybody agrees there's a preservation of wealth. I'm not going to go down that route again because you've heard it all before. I might revisit it in the new year and probably will. Silver's a bit different. It's a bit of a rockier ride, but I'm going to hand over to Nick to tell us why now are people, why are we talking about silver, particularly, and why maybe by Easter some of the financial journalists in the country might start talking about silver when they've probably missed the boat. But that's the usual game, isn't it? So anyway, Nick, tell us all about it. Why silver? Why now? And a bit of the jolly old history. Mind you, because I'm old enough to know some of the history as well, so I might just pop my bell end in there and find out what's what.
Well, yeah, Godfrey, the silver in the world is running out, and it's about to break the global economy. So every solar panel on every roof, every 5G tower, every data center, every electronic vehicle coming off the production line, they all need one thing right now. Not in a couple of years, not in a decade's time. They need it now. And obviously it's silver. It's the one resource they're all scrambling for. Um, yes, look, the market's been behaving quite erratically over the last couple of months, but even since the beginning of the year, back in March, April time, a solar manufacturer in Germany, they quietly had to cancel all of their orders. A defense contractor in Virginia added silver to their strategic reserves, and three Asian refiners stopped accepting contracts completely. Now, on top of that, China have stopped reporting their import data. That was around about end of 2023. They import about 20% of all the global supply. They've gone completely dark. They've gone off the face of the earth. That's because they're accumulating the metal. And as of next year, 2 days ago, they're putting export restrictions in place too. So no silver is going to be leaving China unless companies have a specific license to do so. Then you've got the Indian imports. They've hit a 30-year high, not because of jewelry, but because they're accumulating strategic reserves. And the government have classified silver alongside its military assets. And you don't do that for an industrial commodity. I'd argue it's for a weapon. You don't, there can be no other reason. Russia has diverted 100% of domestic silver production to their state reserves. They've not sold any, they're not exporting any, they've just stockpiled it. And the US have just come out as well and declared silver a critical mineral for national security. And that's because, Godfrey, they've got hardly any reserves. Compared to the rest of the world, they've got nothing. They sold them all between 2005 and 2015, pretty much every ounce. But all of that aside, on the global scale, what's really important to look at as well, and I think most pertinent, is the corporate buying behavior. So Tesla, they've secured and locked in 7-year supply contracts last year at fixed prices. Before this squeeze, they knew this squeeze was starting to come. You've got Panasonic, LG, Samsung, they've all done the same, all signing long-term deals with mines directly. So you've got to ask yourself, when the world's largest manufacturers are starting to hoard, it's because they've seen the raw hard data. And most of the public haven't seen it yet. They still think silver is a secondary market metal that's designed for a smaller investor or a collectible. It's certainly not. The smart money are all starting to position, and inevitably, That's going to lead to more export restrictions and more capital controls going into the new year. And Godfrey, you know exactly what they're going to do. They're going to come out with all manner of silly reasons as to why they're doing this. It's for environmental reasons, because we need to guarantee net zero. It's going to be for national security, or whatever narrative they want to concoct. But then finally, on top of that, the next layer is big tech. So the AI hyperscalers, your Microsofts, your Googles, and your Metas, they're all coming into the market now this year, towards the end of this year. We can see it. There are huge buyers coming in, which is keeping a base on the price. And just in case any of your audience are unaware, if you like, as to why they need it, it's for AI infrastructure. That's your data centers and power grids. And data, Godfrey, is, well, it's becoming the new oil. And data needs energy. Energy needs your silver. And silver is the only thing that will conduct that electricity efficiently enough. So perversely, we're moving back to, I suppose we're moving back from a digital economy to a physical one again. If you look at AI, it requires, it's anywhere between 10 to 30 times more energy than a Google search, which our grids simply cannot handle. There's no way they'll ever be able to handle it. So what these AI giants are doing is building their own grids with massive solar stacks on top of them to generate the electricity cheaply enough. And they all know the silver market is too small to accommodate them all. So we've almost got this kind of Cold War race going on for resources. They're all trying to get silver. They're trying to front run the market, basically, Godfrey, and buy the mine before actually building the factories. And that's because, look, they've got everything. They've got the products. They've got the consumers. They've got the perfect setup. The only thing they are lacking now is the power. And how are they going to do that? Well, they need huge amounts of silver. BlackRock, you must have seen this, Godfrey. I know you've been pointing them out for a while. BlackRock and Microsoft announced a partnership, again, last year, a $30 billion fund to build this specific AI infrastructure. If you look at the actual supply of silver every year, it's only about 25 billion. So this one fund have got more capital than the entire year's worth of silver supply put together. And then you add in the other tech giants to the mix. That's about a 100 billion commitment. So the maths don't lie. South Korea, obviously Samsung, 4 South Korean banks have stopped selling physical silver this year. And it's not because obviously they don't want to sell it. Of course they do, but it's because they couldn't source it. So this really is the largest commodity crisis that's unfolding in recent history. And I think what's so important is, yes, these numbers are shocking, but you have to look at silver from a historical perspective to understand what's really going on and how bad it can actually get. I'm sure you know it as well, Godfrey, because we've spoken about this in the past. There's a 4-stage pattern that's played out with every commodity crisis. It's the same thing with oil in the 1970s, wheat in the Irish potato famine, most recently palladium back in the early 2000s. You can see these cycles happen. All the publicly available data is out there, but we are in stage 3 of the 4-stage cycle, just going into the final stage, where you see these rapid increase in the value of commodities. And that's what's starting to ring alarm bells for governments worldwide, because they all know what's coming. It's really worrying.
Now, this is obviously going to be reflected in the price because it's an old-fashioned nature of supply and demand, because there's no way that really the price can't go. It's commodity which is needed as a commodity in short supply. So it must be reflected in the price. Now, a few questions for you, a few odd things. As an old geezer, I remember the Hunt brothers, and I remember quite well silver at $50 an ounce. So now here we have the most interesting situation where we've only just gone past $50 an ounce, just relatively recently, $65 this morning, I think, or something like that, or whatever. But that's not the point. But one might argue that if you took, I mean, the price ought to be somewhere in the region now since 1980 when the Hunt brothers did it, manipulating the price, if you will, when the Hunt brothers did it, even if you just allowed for inflation, if you just allowed for CPI, the price ought to be $160, $170 an ounce. That's without any other of the things coming into play. And as you know, because I bought them from Gold Bullion Partners just 4 weeks ago, I bought a fairly decent trade of silver. And of course, there was a premium on it because silver. I bought silver coins. Why wouldn't I? Britannia's. That's my thing because of the tax position as a Brit. And there was a premium. I think I don't know 6 or 7% on the coins, and there's lots of reasons for that over spot. And I don't think there's any point in going down that rabbit hole. But I mean that's the fact of the matter, which I've made up in the last 4 weeks. I've made up and I'm in profit already, which is an interesting phenomenon. I have also made mistakes in silver over the years. I think 7 or 8 years ago, I took quite a big position and it really was rotten. I got out of it in the end. I made the mistake actually of buying an ETF, a silver ETF, but that's not the point either, really. So anybody out there, and Nick will put you right on this, if you think you're buying silver with ETFs, you're bloody well not. It's a promissory note, but I know that Nick will explain some of that to you. So it seems to me, and the market seems to be saying the same thing. There's all sorts of weird forecasts coming out, but there's almost nobody in the know who's forecast less than $200 an ounce. There's nobody forecasting it less than that. And a lot of people are forecasting a lot more. So as they used to say in the Ashridge management courses, what's the doing thing? What's the doing thing? Because this is going to attract certainly my subscribers who are now getting to be quite informed on precious metals, but they haven't played silver before. How do they go about this? What's the doing thing to get in on this, even if it's only for a few years, ride on the back of it and consolidate later? I don't know. But what would you say to them?
Godfrey, you have to have the physical now. You cannot have ETFs in an environment like this because this is a commodity super cycle that's coming. Look, you were burnt years ago with ETFs, for goodness sake. Those have got some of them at the moment, 5-to-1 leverage. Now, what that means, they don't have all the silver that they claim to have. They rehypothecate it. The relevance of that is, though, at 5-to-1, if the market, say, it's very volatile, as you correctly said at the beginning, if the market falls 20%, which it can do in the very short term, just like it can go up 20, 30%. If that happens and everyone tries to sell, well, it's not worth the paper it's written on, and it's worth zero. And that's why people get caught out, because they speculate. It's crazy. When the upside potential is so high for silver, why would you want to take on any risk with a paper instrument? You've got to own the physical. Now, with these export controls coming in for the metal as well, you want to be keeping it in a neutral jurisdiction, like in Switzerland. So not only do you not have to pay VAT on it in Switzerland, because it's outside a UK jurisdiction, you're also completely protected, because if our government decide to implement a capital control on it, export restrictions, you can't take your silver with you, you can't leave, you can't sell it, whatever it might be. But if it's over there, you're absolutely fine. And you look at the green agenda that's being pursued with this cabinet, and it would not surprise me if that happens at all. So you have to have the physical, keep it in a bonded vault in Zurich, in London, in your name and your name alone. It's not mixed in with anybody else's silver at all. And buy silver coins because they are legal tender. They're completely free from capital gains tax. So you have the luxury of being in an asset there's going to be a hedge against inflation. There's huge demand coming from an industrial point of view. It's completely capital gains tax free, and it's VAT free. So I can't think of any other asset in the market that's got as much upside potential with those many benefits and is going to give you that safety and that security. And nothing's ever a one-way bet, but this is as far as close to damn it really as I can see, Godfrey.
Well,
The numbers don't lie.
Well, I've spent about 6 months, as you know, crunching numbers and thinking and pondering before I made my not insignificant trade just a few weeks ago, because I've been in the investment world in some form for years and years and years. In fact, I actually started as a very junior fellow in 1967 in the city, and I've been involved in some way ever since. You know, the Beatles were the latest craze when I was in the city. So I've been around, and I'm a careful sort. As you know, I manage fixed interest, so I'm a bit of a number cruncher, and I'm a bit cautious on these things. But I've looked at it in every significant way that I can, and without some sort of geopolitical Armageddon, I cannot see, like you say, I can't see a downside. Even in the relatively short term, I can't see a downside. But then, you know, I don't know. It looks. I'm the old school. If something looks too good to be true, it usually isn't true. But this way, the numbers are telling me.
Yeah, when you get a few celebrities like these high-flying VIP A-listers and things going on about it, sometimes you think, "Oh, am I late?" But no, I think everyone's just starting to wake up. The pendulum's shifting, and they realise what's going on with the global economy. Over the past 4 years, global inventories have plummeted by about 65%. Meanwhile, demand for silver in solar panels, that's projected to be 200 million ounces by 2026, beginning of next year. That's up from only 85 million in 2020. And this surge in demand is combined with a dwindling supply as well, that you can't ignore that either. And what makes this shortage particularly alarming is the scale of these changes. Yeah, just running the numbers. We're not witnessing marginal increases here. Industrial production is set to double in less than a decade. Yeah, so silver supply every year is just coming down and down and down and down. And that's critical too, because like we said, it's not just a commodity, it's also money. And for 5,000 years, silver has held its ground, not only as this irreplaceable industrial asset, but as a reliable monetary metal. It's got centuries of trust. So when explosive demand like this collides with a monetary system that's based on debt, it doesn't just lead to a marginal adjustment. It triggers blowouts. And you'll remember, Godfrey, from, well, back when the Hunt brothers cornered the market, the silver price went up 2,600%. That's insane. And look, you'd have had to have sold it at the top, yes. And then it did come back down. But what other asset rallies like that?
I was frightened you were going to say, you will remember. I thought you were going to say you remember the denarius, which I will, a little bit cruel. Now I'm going to play a little bit of devil's advocate, because the people on my subscribers on this channel are pretty wick, as we say up here in Yorkshire, and they will want me to ask the question. We have begun to see the collapse of Volkswagen. We've been beginning to see the collapse of the German automobile industry. We have been beginning to see, frankly, as far as I'm concerned, the great hoax of the climate crisis, which involves solar panels, electric cars, which are, as we speak, being abandoned. The legislation's being abandoned. You're going to be able to buy petrol cars. Some of the automobiles going back to petrol cars. And one final thing, which I'd like your comment on. I did actually do the numbers on the difference it would make to articles which need, or things that need, silver as a commodity because of its ability to conduct electricity and all the sorts of things silver does, which other things didn't do. And I did notice some of the numbers. even if there was a quite significant, even if silver went up in price 4 times, the actual end product, I mean, like a Patriot missile, for example, which costs X millions, it doesn't actually wobble the price that much. And the amount that goes in, okay, batteries and things, but taken as a whole, I think we would see. I can't see how the European and some of the North American companies can continue if we continue with net zero or something close to net zero. So I would say, what would be your view in a few years' time? People going, yeah, this is, yes, there's still a shortage of silver, but that's very old news. Electric cars, nobody wants them, nobody buys them. Solar panels, which are a laughing stock, we've got them up here in Yorkshire. You've got to be kidding. You can't see out of my window at the moment, but that's Yorkshire. I love it, but the sun don't shine. So what do you see of the whole geopolitical dynamic?
Oh, that's a really good question. That's quite a deep one. I could give you quite a comprehensive answer, I suppose. Look, we can look at the short-term numbers for every other different usage for it out there. Military, industrial, that is not even reported by every country out there because they don't want the public realizing just how much they're using in arms development. So all the numbers lead to a huge increase in price, just looking at solar, electric, medical usages, etc. So this isn't a prediction in price. This is just a pattern recognition, I think, Godfrey. And throughout history, a four-stage system has governed every one of these commodity super cycles. And I hate saying anything's inevitable, but this outcome really is. So when you look at these cycles, you start with stage one. And this is where abundant supply breeds complacency, if you like. The resource is cheap, it's readily available, and it leads to this false sense of security. No one feels the need to explore for any more, build any more mines, because they operate under the assumption that, well, supply is always going to meet demand. Stage two then sees this huge surge in demand, if you like. So supply struggles to respond. Your new technologies, your 5G towers, solar panels, etc. We've already discussed it. But mining takes years or even decades to ramp up to that. This is the crucial thing. Now, we find ourselves currently in stage three, where there is a structural deficit. That's becoming evident. Markets recognize that supply won't catch up for years and years and years. Inventories are draining like they're going out of fashion. And these shortages are now starting to appear. And this is where we're seeing the loss of control in the paper markets. Yes, they're trying to keep them down as much as possible, but they're starting to break. Then finally, you have stage four, which is marked by price delocation. You have widespread panic. Governments begin stockpiling. Industries are hoarding resources. Look at what we're seeing this year. At this point, prices don't rise, they explode. I know I hate sounding bombastic, but it's true. Look at the value of oil, the value of wheat, the value of palladium, last three of these cycles we've seen. And once these patterns unfold, you can't unsee them. And if you apply this to the framework of silver, Godfrey, stage one, for over 40 years, silver has been absurdly cheap. Just look at the graph, doing nothing, very, very cheap. And to come back to what you said actually there, Godfrey, in inflation adjusted terms, it costs less today than it did in 1980. So despite this 45 years of monetary expansion and industrial growth, silver has remained very, very undervalued due to this decades of supply outpacing demand. All governments sold off their silver. There was just a real complacency. No one cared about it. Stage two marks the point where inelastic supply met surging demand. So obviously this green narrative started in, well, probably around about 2010. Solar energy was a bit negligible back then, but now it's the fastest growing energy resource globally. Every silicon solar panel regardless of what people's opinions on them are. They use all this silver paste because we know there's no effective substitute for that efficiency. That's 200 million ounces of demand. You factor in electric vehicles, which use twice as much silver as conventional cars, the rising demand for 5G towers, which are literally going up everywhere, and medical devices. We're looking at industrial demand of about 1 billion ounces annually, all while mining output peaked at 880 million back in about 2015 and is still in slow decline. So the other thing, to answer your question there, is it's crucial to grasp that 70% of silver production comes as a byproduct of lead, copper, and zinc mining. You can't just increase supply naturally by making a brand new silver mine. There's hardly any of those. The focus is on base metals, which often leads to silver being a secondary consideration, if you like, when it's coming out the ground. Compounding that problem is base metals, as you know, Godfrey, they're very volatile too. And capital expenditure for new mining projects, that's at multi-decade lows. So no new silver supply is coming online anytime soon. And economists like to call that an inelastic market. But after that, we're currently in stage 3 of this commodity cycle. And that's everybody starting to recognize that this colossal deficit actually exists. Another statistic for you, I know I've given you quite a few this evening, but in 2020, the COMEX had 400 million ounces of registered silver. Today, that figure's at 60 million ounces, which is less than 3 weeks of global consumption. The Silver Institute, they've confirmed that. Physical premiums are rising, delivery times are extending. In the paper markets, there's currently 100 ounces of paper traded for every ounce of silver held. I mean, to me, Godfrey, that represents a complete loss of control, all while industrial demand for it is going through the roof. So this is a multi-year structural supply crisis. It is not temporary, to answer any of your clients that may be posing you that question. It's not temporary. This is structural, and it will be going on for years. And this year, and I think going into the new year, stage 4 is going to start to set in. So there's going to be a major player in the solar panel industry or a defense contractor publicly announcing they can't source enough of the stuff. And that is going to trigger a cascade of buying. Governments are going to start to rush and try and secure supplies. Investment demand is going to start exploding. The paper market is likely to break. And that's going to lead to, again, further restrictions on delivery of it, forced cash settlements with people's ETFs. We've witnessed this before, and we're on the brink of it again. And when that happens, silver decouples from the paper market. The industrial bid is going to start to align with the monetary bid, especially during times of panic. And currency crisis. So silver won't simply rise steadily. It's not going to happen. Instead, it's going to surge dramatically. It's going to gap up $50 an ounce, $75 an ounce, $100 an ounce. This is just a logical outcome. This isn't my prediction. It's just the maths. It's just the dynamics of supply and demand and how much silver we've got left in the market. And the fact that there's no other substitute for it.
How are we going to deal with the supply of silver coin in the coming year or 2026? Because I'm still, not quite old enough to remember silver being being coinage, or one might argue. I think there's an argument, and a lot of people within the gold and precious metal space don't agree with me. But if you think about it, silver being a smaller denomination, and here again I go back to the Roman Empire, the denarius, and of course they degraded it with alloy, so they that's what they did. They destroyed the currency, and of
Yep.
course, and I go on to say they destroyed their currency, and they destroyed their borders. They couldn't control their own borders. Start ringing any bells with anybody here.
Very reminiscent, isn't it?
Yeah. So now here's the thing, and I was talking to one of your colleagues about this, and he said that people have these coins, sometimes old coins, old Britannias or old silver, perfect coin of the realm. They tick every box, but they don't seem to be easily obtainable or
They're not.
saleable. Whereas mine, when I bought a few weeks ago, and I'm very glad I did, it's been a good idea. They're nice, shiny Britannias with the Queen's head on. Not this other dreadful fellow who's on the throne at the moment. They've got the Queen's head on, and that's what I like. But I hate to say something along these lines on this kind of thing because it's not my style. But it's a sort of potential buy while stocks last, or am I missing a point here?
No, Godfrey, that was the case. 3 or 4 weeks ago, we had to stop selling it. We couldn't get our hands on it for about 2 or 3 days. I've never seen that. That's now starting to happen. Some of the biggest wholesalers and mints in the world have just run out of supply. They've cancelled bringing on new clients. They've cancelled contracts. They're starting to really struggle because they know we have probably got 5, maybe even up to 10 years worth of extreme shortage, because it takes 7 to 10 years to bring a new mine online. We haven't got that time. This deficit is real. You're right. Silver grades throughout the world, they're declining globally everywhere. The only thing that would dampen demand for it and for the physical metal, bars, coins, anything else, is a halt in this energy transition. And as this transition has now been mandated by law, obviously here in the UK, Europe, China, and the US, they've all committed trillions in subsidies. Most industries are being completely rerouted and retooled, and they all require huge demand for it. So it's only going through in one direction. This is about policy too. It's not just what industry wants; it's what government is mandating, which is again quite nefarious.
But that's the point. See, governments come and go. Can I put one final question to you, if I may? Because I'd be very much interested in hearing your view on this. And I'm a preserver of wealth. I like to be a preserver of wealth, and so do most of my subscribers, because they made their money somewhere else. They're entrepreneurs or whatever they've done. But I would say, tell me if I'm getting this wrong, because the climate thing is a very political dynamic, and I know there's plenty of other dynamics in the mix. But I don't see any political dynamic, which in my own particular view is based on very suspicious scientific analysis. But leaving that aside, would there be a margin? Would there be merit, for example, in for those who can do it and those who don't mind taking a slightly more speculative stance on these matters, perhaps buying a silver position, a not insignificant silver position, which might otherwise gone into gold coinage, both coinage for the Brit, tax reasons, so on and so forth. And if you make, let's say, at the end of 2026, we've seen the price quadruple, for example, which in my view is a very realistic figure for silver, very realistic. Then to switch back into gold to preserve that gain that you've made, or am I missing any points here?
Well, silver is still a monetary metal. I would never buy silver with a view to only holding it a year, Godfrey. You need to just buy it and forget about it. Forget about it for 5 years, because the money is made by sitting on it, not trading in and out of it. Now, some clients do that. They think, oh, I'm going to reduce my exposure, bring it back into gold where the volatility is a lot less. Yes, they do that. Most of them, given the upside potential for silver at the moment, are just sitting on it, Godfrey. And the window to act is now, because you won't be able to get it soon. You'll be competing with millions of people to try and get out of cash and put it into a physical asset, and that life raft is slowly drifting away. You just won't be able to get it. So I'd say the upside potential of it is actually a lot higher than gold at the moment. The Chinese and the Russians have even announced silver is going to be part of their new CBDC, the Unit 2. So we're at this crossroads of huge industrial demand, small scale investor demand coming through now, and a monetary reset. This trifecta is just going to cause prices to carry on going up and up. So sit on it for the long term, forget about it for 3, 4, 5 years. Don't watch the price of it every day. And come back to it, and hopefully you won't have gone too far wrong. And again, this isn't financial advice, it's pattern recognition. The maths, the numbers, they're all there for any one of your audience, Godfrey, to go and publicly research. Is very, very easy if you've got the time to do it. So whatever you do, don't put it into paper derivatives. Don't try and trade it and get cute with pricing. I hear so many clients, Godfrey. I had one last week. I think the silver price is going to come down 3 or 4% according to the charts. Then it went up 6%, straight back on the phone and wants to buy. And that is day in, day out. People are trying to get too clever with it. That's like picking up pennies in front of a train track. Oh, you might nickel and dime and save a few pennies here and there, but when the market crashes, you're going to get wiped out. You're not going to get anything. So it's a reframing, I think, of people's narratives. It's not for trading. Sit on it as a store of wealth and forget about it for 5 years. You won't go wrong.
Well, that's most helpful. Thank you. But I mean, certainly my subscribers, or the people who've been following me, some of them for years, they know that it's something you hold. You buy and you hold and you walk away. And so it would appear that that's just the same for silver as well. Walk away from it and stash it. And certainly don't trade it. I tell all my subscribers, don't try and trade it. And we have one or two. And they always make a balls of it. They always make a balls of it. They think they can beat, in fact, I would argue quite professional traders these days don't make much money. The punter, the man on the Clapham omnibus behind the 8 ball, who's paying a bigger spread, is on buy it and hold it. Good stuff. Make sure it's coin of the realm, and you get your tax advantages, and stick it in Zurich. So I think that's a good point to finish on. It's a good point to finish on.
Can you recognize it before others do? That's what I keep trying to say to people. Look at what the institutions are doing. Look at what the smart money is doing, where they're positioning themselves, and they are not making a fanfare about it. No one's making a song and dance. They're getting ahead of the retail pack, way, way ahead. But I just want everybody else to get into a hard money that is actually going to protect them and hopefully give them some level of capital appreciation. To quite the extent.
Well, Nick, thanks again.
Thank you, Godfrey.
And thanks on behalf of my subscribers, who I know follow these little chats we have quite closely. So that's really good. And of course, we'll probably get together again in the new year for another chat. If it's see how markets are moving very quickly now on all sorts of fronts, and so it's a moving game. It's a very dynamic world, and we're living in. Which is great. So speak to you again very soon, and thank you for coming on.
No, thanks again, Godfrey. Always a pleasure, and I'll catch you later on. Take care.
As most of you know, my work is very heavily independently research based. And I get my information from all over the world. It would help if you press the subscribe button and the little bell next to it, because the more subscribers I have, the more likely it is that international independent research institutes will share their material with me. It's most helpful, and then of course I automatically share it with you. So surprise, won't cost you anything. Thank you very much.